Hello, everyone. I'm John Soroka with Soroka Brand Development and the Mortgage Technology and Marketing Committee Chair, and welcome to our webinar today at Connected Funnels, Sales and Marketing United. Wow, what an important topic. So before we start, I'd like to thank our new Mortgage Technology and Marketing Committee sponsors at Tavant. Tavant is a Silicon Valley-based technology company solving the most complex lender and borrower challenges and solutions, services, and Tavant Velox, an AI-powered digital lending suite of products. As we dive into this webinar on a connected funnel, Sales and Marketing United, Tavant's new product does just that. FinLeads is a Salesforce-based customer acquisition and engagement product that allows lenders to maximize lead potential and accelerate closures, improving lead conversion by 35%. Lenders can improve operational efficiencies and funnel management with intelligent algorithms that automate, streamline, and personalize the lead-to-loan journey. It integrates leads from various third-party sources with multiple lead aggregators and automates lead submissions directly into Sales Cloud to provide a consolidated 360-degree view of loan operations and customer transactions. To learn more, email hello@Tavant, Tavant.com, or visit TavantVelox, Velox.com. And now for our topic today, ladies and gentlemen, the unification of sales and marketing to connect the funnel. Today, we're going to learn about challenges lenders face in business processes and systems, best practices to build a seamless interaction model, the right tech stack, and you'll also hear a case study of a successful connected funnel execution for a top lender and much more. So with us today, I am thrilled to present to you Samya Ghosh, Vice President of Digital Services at Tavant, leads the Salesforce practice with 2 decades of experience in customer and consumer-facing application and data management. And Walt Carter. Walt Carter is an accomplished executive with more than 25 years of success across financial services, mortgage, healthcare insurance, and claims industries. Walt specializes in alignment to purpose and technology innovation, is adept at working through complex business challenges, and has successfully implemented several enterprise-wide packaged software solutions. Throughout his executive career, Walt has held leadership positions with Primary Capital Mortgage, Generation Mortgage, and currently is the Chief Digital Officer and CIO at Homestar Financial. By way of some background, this webinar is a production of the Mortgage Technology and Marketing Committee. The committee was formed to support the development and dissemination of new technologies and marketing strategies that the mortgage industry needs to embrace. As we go through this, please submit your questions and I will direct them to the right individual as they come up, or you can wait until the Q&A time at the end. With that, over to you, Walt.
Thank you so much, John. Pleasure to be here today. And for you guys out there on the webinar, you know, my background is not nearly as interesting and as exciting as John made it sound. But I appreciate that warm introduction. Today we want to talk about really the connected funnel. How do you help, kind of move the needle in your organization? We have seen, an average, an ever increasing average cost to produce a unit in the mortgage business, and it is currently, kind of right at that $8,000 per unit. And as you break that down, what we know is that the lion's share of those origination costs are really wrapped up in the sales and marketing piece. It's as high as 60% of the total production cost for banks, and for the independents out there like my company, Homestar, it's even higher at about 70%. According to a study from the MBA and Strathmore peer group roundtables in 2018. So it's fairly recent data that shows, that astronomically high number for sales and marketing as a percentage of your total production cost. So it makes more sense to us then, in a lot of ways, Yeah, and by comparison, the other factors are, fulfillment costs and sales and marketing costs plus production technology. The technology piece is actually the slenderest thread. It's the smallest piece of that pie. And of course, the more units you're running, the smaller that piece should be. So our focus then today is on optimizing production costs in the place where you get the biggest bang for the buck, and that's sales and marketing. So we're going to kind of drill into that just a little bit and talk about how we might better serve our marketplaces by focusing on that integrated sales and marketing. So let's go to the next slide, Chemo. We know that our MLOs out there are all looking for help, right? They have continually said they wanted to generate more repeat business from their referral networks. They want access to good, clean leads that haven't been shopped already. They want to stay in front of their referral network. They want to be able to do some things with current customers in particular. That's a big need for them. People that have successfully closed business with them as their MLO are great referral sources. How do we do better at that? And then how do we grow and maintain name recognition as an MLO in a particular market area? And so as you look at survey results from that 2018 LO survey from Outbound Engine, you see that we have derived, I guess, that time and expertise around lead engagement is one of the biggest constraints for the MLOs. They've got a lot going on as they're moving through their marketplaces. And so how do you best engage with leads? And I will tell you that, my experience, I've been in the mortgage industry now for, more than 10 years. And what is interesting to me is that the LOs are constantly battling that I've got to spend a lot of time with my referral network to get the referrals coming through. Once I get my referrals in from my referral network, then I quickly am triaging those. Anybody that's ready to go right now, I'm taking to the mat and I'm getting them a loan. If the loan is doable, I'm going to take them all the way down, and we're going to get them applied and into underwriting just as fast as we can. The biggest challenge is actually in the next area where I'm not quite ready now. If the MLOs are working with me as a customer and I'm not ready now, it's according to me, it's about 3 big buckets. I don't have my down payment, I don't have my credit right, and I don't know where my dream house is yet, right? So I'm not ready to go ahead and apply. I've got one of those 3 reasons. Now my CEO says there's actually 28 better reasons, Walt, why they're not ready now, but you're in broad buckets. You're largely correct. So how do we help? How do we help our MLOs? And so let's go to the next slide. And before we get too caught up in solving that problem, we have to recognize some external factors, don't we? For those of us that have been in the mortgage business for a while, this last few months and the last year and a half really has been, kind of a wild ride. We've seen, an increase in interest rates that hopefully is turning around now, that will change the market very quickly, because as the interest rates are going up, the refi opportunities go down. As the interest rates go up, it is also true that the purchase in a lot of ways goes down. And so we're seeing these switches though, where we have to rapidly move our focus from one channel to another channel, which then requires us to recalibrate skills. Our operations teams are really just kind of pulling their hair out. How do you manage with these huge workflow swings going through the marketplace? Purchase market has seen a total swing of a negative 41% over the last 6 quarters, according to Fannie Mae lender sentiment survey. The refinance market has seen a net swing of plus 26% in the last 6 quarters. So we're seeing these very wild swings in the marketplace. And I'm not an expert in this. I've only been doing mortgages for about 10 years as a CIO and CMO. But what I'm seeing is there's a lot of instability out there, and being in a position where we're agile enough or nimble enough, flexible enough to very quickly move from one market to another market to another market again is a very big challenge in an organization. For us, you have a lot of people in what is essentially a manufacturing type of mindset, and getting those folks, to be that nimble can be a real struggle because they're used to doing the same thing the same way over and over again, just like a manufacturing process. Let's go to the next slide. Thank you. We're looking at kind of some other trends that I want to talk about a little bit before we get into real solutions. Key to getting the best solution is getting the problem right. We've talked for years now about the lack of inventory. We are talking a lot in the executive suites in our industry about the changing buying patterns within the demographics, which has driven many of us to embrace much more technology, and specifically what has come to be called digital transformation. Not too many people really know what that means. I'm certainly not going to declare myself to be an expert in that, but for our company, what it means is we're recognizing that the younger the consumer, the less they want to talk to a salesperson, and the more they want to engage interactively with technology, and that's their preferred medium. They don't really want to talk unless they have to. In talking to a number of consumers in that youngest demographic that are slowly coming into our marketplace, much slower than previous cohorts, we're seeing that they do want a guide. They don't trust the technology. They don't trust some other kid that built an app on their iPhone or their Droid to take them all the way through the biggest purchase of their life and the most risk that they've seen in their own bank statements on a regular basis. So they're looking for expertise. What they don't want to do is be trivialized or disrespected in the transaction flow. And so as we start to embrace technology, and particularly the focus on digital, we're starting to see that we've got some real challenges that we need to overcome there. Let's move to the next slide. Let's go back to the conversation about what the MLOs really want, because I think that the digital tools that are going to move the needle for us most are probably focused around what the MLOs have expressed over and over again as their greatest needs from a just a personal productivity perspective, right? How do I spend my time effectively dealing with my referral network, staying in the heads of all of my realtors and my builders and my other community leaders who are influencers? And how do I, balance that with, looking at my active pipeline, solving problems for the borrowers that have already applied, that we're trying to get across the finish line on time so I can get my commission, and also work my prospects list so that I can move those prospects to an application and get them into my pipeline. So there's a lot of challenges there for an MLO, and particularly in the marketplace where there's a lot of competition at any given time. As the refis dry up, that pushes everybody in that was formerly focused on refis into the purchase market. And so if you're a person that focuses on purchase, then all of a sudden you get a lot of new competition for that same business that you didn't have previously. Same thing when everything flips and refis are starting to go good, then you see, all of a sudden everybody starts jumping into that pool because there's better opportunity there and there's lower cost per refi. So you want to scoop up as much as that as you can. So the digital tool sets then that are going to drive higher touch with higher efficiencies almost all revolve around this idea of marketing campaigns and mind share acquisition. So the things that we're looking for then are the things that will actually help that MLO be very efficient, very economical with their use of their time, and still, be predominant in their marketplace in working with particularly that group of referring partners and those people that I described earlier as the not ready nows. So let's go to the next slide, Shamo. If you can imagine being in that environment that we just talked through, and having a disconnected, disparate set of tools that don't really talk to each other. And you're trying to look up stuff in one system, look up stuff in another system, manage, your campaigns out of a disconnected CRM that's not tied into your pipeline tool set, into your LOS, into your marketing campaign management tool set. That lack of unification, the lack of ability to have one sheet of glass or one window pane to look at all of these kinds of interactions can just suck the life right out of you. It's not just an efficiency killer. It's kind of a soul sucking thing, right? I've got just too much to do, not enough time to do it, and I can't really be chasing this stuff around all the time, which correspondingly then drives some of our more affluent LOs out there to hire assistants to start to work around the lack of integrated systems. But if you had integrated systems that present that single view of the customers and the process, you can greatly improve the efficiency and the economy, which would then also greatly improve the experience for your customers. And we've set out on a journey at Homestar with Tavant as our partner to literally start to move everything from our perspective started with optimizing that control and the ability to see for our MLOs. And yes, we're focused like a laser beam also in our consumer portal, our borrower portal, on the user experience for the borrowers. But the reality for us is the MLO is really the center of production for us. And so our first and primary goal was to center on the MLO experience, optimize the MLO experience, believing that if we did that, we would also at the same time be optimizing the user experience for the borrower. Again, if you can provide that integrated set of systems and you can connect all those dots in a single pane of glass for the MLO, they can very proactively be managing their life, managing their customer interactions, managing their referral network, and communicating seamlessly across all of that with good, solid information that's up to date. Turns out to be that's pretty important. So what do we change? What do we change? How do we change it? I think for us, we started with, what is a customer journey? How could we answer these questions of being very high touch without taking on the persona of a stalker, right? How do we avoid that invasion of privacy, but at the same time avoid asking the same question over and over again and asking our customers to provide us with that same answer over and over again? How do we be appropriately high tech, but at the same time intensely personal? These are important challenges for us, and within that customer journey, we really have to know what we're doing and be anticipatory of what that customer experience might be like. The market requirements, those big swings that we talked about, dynamic capacity management, some of the things that we're starting to see is that the more we can automate the mundane, the more that we can start to apply intelligent learning, whether that's true AI or just really advanced machine learning. Those things are going to be the key to the future, we believe. That's where we're headed. That's where we think the most opportunity is. And then lastly, getting to that single pane of glass, that turns out to be not so simple and straightforward. Again, especially if you're working with a variety of partners and you've got a bunch of different systems and information sources that you're trying to pull together into that single pane of glass. Getting MLOs oriented to a new way of doing things is also a built-in part of that challenge of improving their experience. And so as we look, kind of beyond just these obvious challenges, we're into the next phase, which is how do we change that customer journey? Shamel, you want to jump in here and introduce a little bit more of what you're seeing more broadly across all of your customer set, and let's talk about that a little bit.
Absolutely, thank you, Walt. Yeah, so one of the things that we we see more broadly is that rightly so, the industry currently takes a very loan-centric view of how they manage their operations and processes. For simple things like the way a loan application process flows from a loan officer to processing to underwriting to a closing desk. At the end of closing, there are statistics that indicate that if at the end of closing the loan officer would do the simple act of making a call out to the customer to just get a pulse of whether that the whole transaction closed with them satisfactorily, the chances that that customer is going to become a referral customer or come back 6 years, 7 years down the line is almost 100% higher than if that call didn't happen. But an act like that often gets missed out because what the focus for the lender at that point of time is closing the loan, and the current staff that has ownership of that is the current group that has ownership is focused on that act, not so much on the act of what has the customer experience or engagement been. So that is what we are trying to change. It's not to reinvent the process, but to introduce some of these simple best practices that can help make the process, while keeping the operational efficiencies, make the process a little bit more customer centric than loan centric. Walt, if you want to, one of the things that we have done, obviously, as part of that, is looked at the journey, which Walt indicated early on, and sort of figured out where along the journey, what are the transaction points, interaction points in the journey, where the digital interface comes into play, where a processor communication comes into play, where an LO assistant has to come into play, or where the LO, it makes the most sense for the loan officer to actually drive the engagement with the borrower. And you can engineer the journey without fundamentally changing the process, but it takes some work up front. Walt, I know we've done that with you. If you want to talk a little bit about that, we can cover that here.
Sure, Samya, we have done some pretty interesting thinking and connecting, and just trying to move the needle for our LOs. We started with an ability to connect our consumer portal directly into our core website, so that as applications are coming across, we're firing notices out to our LOs directly. You've got action in the bullpen, time to get engaged with a particular customer that's actually ready to apply now, or somebody that comes into the portal and says, look, I'm really not ready yet, but I would like to get some information about rates and what the market looks like and what the best program for me would be. Can you contact me? It creates a lead immediately in Salesforce and provides a contact methodology for that customer. So we're seeing. Hope everybody's okay. Seeing again, some great connectivity there, and then we pushed everything in a tight connection from the portal into our LOS. We use Encompass as our LOS, and then from Encompass back over into Salesforce, we've actually pushed the pipeline. We're pushing notes. We're managing, a wide variety, frankly, of alerts and notifications and communications. And then we're also moving some things through Marketing Cloud on the customer loan journey to match the milestone progress, so that we're notifying everybody on the contract as the loan advances through those steps. So we're seeing that, with that combination of tool sets integrated that way, we're actually creating that control, or that single pane of glass, which for us is Fin Leads. It's the product from Tavant that John talked about at the very outset of the call. We're actually seeing that our loan officers can start to participate more fully in the loan journey for their customers, and also then participate more fully in explaining where everything's at to our partners and any of the other stakeholders on a particular loan. So we're seeing some really great integration outcomes that all are tied to what we call this customer journey. We're really trying to take the focus, Samya, from the loan centric view that you talked about, to more of a consumer centric view, but really anchoring into what is essentially the core relationship set for the MLO. And that core relationship set includes far more people than just the consumer or the borrower group. It actually includes many other stakeholders on each unit, and more broadly the referral network.
Yeah, I think Walt, you've touched the key. A lot of this is around integration of systems, and and then applying the intelligence. There's technology out there that can apply intelligence today. You spoke a little bit about how the market swings require changes in operations. Again, not dramatic restructuring of the operational capabilities, but intelligence can be applied during that process to do simple things around engagement, around the marketing and the lead engagement funnel that actually helps recalibrate your loan officers towards a purchase market or a refinance market. For example, a simple thing like where is your lead priority today? If the market has moved, can intelligence be applied based on market conditions, data that you're collecting from the broader market, towards opportunities that are a little bit more refinance oriented? So bring up the lead scores there, make those leads a little bit more actionable if they exist in your loan officer's pipeline. I think those are some of the other things that I think we are looking at. So Walt, I know I jumped into the next area here, but if there are other things that you wanted to highlight in terms of what Homestar is doing, that's great.
Well, Shama, we're experimenting a little bit with some AI tools. We are experimenting a little bit also with RPA, and again, I think the trending certainly looks like over the next few years, all of us in the mortgage industry are going to have to do a much better job of using data to drive the interactions in that journey. And so, I feel like, frankly, if we haven't already started, we're way behind. And so I really appreciate the opportunity to kind of learn from companies like Tavant, how across the industry people are moving into these spaces. Because, you think about it, a few years ago, nobody knew about RPA at all, and AI we've been talking about for years, but it's been mostly kind of a Hollywood presentation of AI, not an actual production enhancing capability set. But with some of the tools that we have, particularly on the Salesforce platform with Einstein, we're really leaning hard into being able to take advantage of that kind of applied intelligence to make life better for us, and particularly to improve that MLO experience.
Yeah, I think the last point I'll touch, Walt, is you're very familiar with this. Being in the retail model, that you do want to be able to configure processes in a way that suit the different offices, because not every loan officer executes what they do in the same way. Especially if they're out in the field and running their own operations as well. So the idea of the Salesforce platform being able to compose workflows almost dynamically, based on what's happening with a particular loan or with a particular borrower, and who is executing that action, which field office is executing that office, I think is one of the more powerful aspects of what we've been able to achieve with Salesforce.
Perfect.
The last piece I wanted to connect was how do you unify the MLO experience? So we know again across multiple sort of customers that we are working with, that on an average, an LO can be operating out of at least 3 to 5 different systems based on for a single loan, based on how the enterprise is configured. And I think, Walt, this has been one of your visions. One of the key ideas is all the way from lead. So you spoke about the Salesforce Marketing Cloud, how it's integrated with the Sales Cloud. But one of the things that I think you've taken a leap of vision towards is how do you get all the way deep into the loan application process? How do you provide that capabilities as well on that single interface, so that for most of their working hours, a loan officer is never really, moving out of that single pane of glass. And that's the journey that, you've been trying to enable, and we've been, working together on. And I think that is key in terms of, delivering the efficiencies that we were talking about early on, in terms of, making the view customer centric, but at the same time with enabling tools, digital tools for LOs, that removes the need for them to move information from one system to the other, or wait for information to be moved from one system to the other, and engage their customers intelligently at certain points of the journey, because the system prompts them to do so, even if they may have forgotten.
And that's a key point, Shamo. I mean, you and I have talked about this now for almost a year. And again, Shamo's the practice leader for our team over at Tavant, and we're really leaning hard, as he said, into improving that MLO's sense of just ownership. I have the data that I need to do my job. I have the ability to go to one place, not multiple places, to find that information and share it. I have the ability to support my customer, my borrower, and my referral network, an extremely enhanced way with this single pane of glass kind of view of the world. I have the ability to move those not ready now customers, for instance, or prospects into, the appropriate campaign for their situation, to maintain mind share there. For my realtor network, being able to, take advantage of somebody that has done a lot of referring with us, anchor into that. For somebody that's just tried us once or twice and then kind of gone away, how do I get them to come back? For the people that are new to our network, how do I get them to understand, why working with Homestar is probably a better way to go than working with somebody that maybe they've used in the past. And so, again, we've created an opportunity for that LO to immediately move those particular kinds of relationships into the appropriate mindshare acquisition or campaign management tool set, all within that single pane of glass. Using the built-in capabilities of the Salesforce platform for messaging and for communicating with IVR and dialers and whatnot. I will go back to something you said, Shemo. That however many MLOs you have in your organization, that's probably how many different ways to approach doing lending you have in your organization. Everybody wants to do it their own way. They all think that their workflow is the best workflow, and so the hardest part is centralizing down to those few views that you can actually support from a technology perspective, that give the most flexibility to your teams so that they can stay comfortable in their particular way and orientation of doing things. And so that creates a real challenge. And I think the flexibility of the Velox platform, has certainly gone a long way toward helping us achieve that. There are other tools that I've seen out there, and we had a lot of choices that were frankly really hard to make in some ways. But ultimately, the single unifying pane of glass turned out to be, the organizing principle that has served us very well over the last year.
Thank you, Walt. So when we started this journey, even before we were talking to Walt and shared some of the same ideas, we had, as Tavant, we had already developed our own, suite of solutions for some aspects of this journey. We had built custom solutions. We had implemented, out-of-the-box packages for different customers. But what we were looking for, some of the key ideas that Walt articulated earlier, the ability to marry the early funnel journey with, the lead engagement journey, where it becomes a little bit more one-on-one, the loan officer driving that engagement, all the way down to looking at, the application management aspects of it. There were a couple of constraints when we were trying to see what's the best way to develop this in a reusable manner, where we can go and, provide a system that is well built, scalable for, some customers. And the constraints, as we saw it, was that, obviously any model that we wanted to deploy out there would have to service different channels, whether it's the direct-to-consumer channel, whether it's the retail-oriented channel. It had to be built in a way where there was an open architecture, there was the flexibility to configure the workflows, to support these models. In some cases, when you're talking to banking customers, it also had to coexist with the other lines of businesses that a bank had. It couldn't work for mortgage and break it for personal lending, for example. So that was one of the constraints when we were selecting the best platform to develop this toolkit in. The second thing was that it had to support multiple roles. So even if you want an integrated view, you'll have different stakeholders owning that portion of the customer journey. The early funnel marketing journey will be owned by more centralized marketing departments. The latter portions become a little bit more allocentric, and then even further down, it becomes a little bit more processor centric. So you had to be able to use a tool or a platform that was able to be customized by role for these different groups. And finally, the architecture had to have the ability to be able to be connected, like Walt was indicating, whether it was upstream with marketing or different types of marketing automation tools or with dialer tools, and downstream it had to be able to be integrated with systems that provided data, whether it was your credit check system or the loan the loan origination system that exists within the enterprise. Based on this and a couple of other factors, around obviously scalability, performance, security, we actually did an evaluation of multiple formats. One way of doing this would have been to build a platform that was just built grounds up, but it didn't have the time to market advantages that using a platform would bring to the table. And that's where we selected Salesforce, because we saw it as the best fit. It came with a lot of the out-of-box capabilities between the marketing cloud and the sales cloud, between tools like live messaging that could get the omni-channel aspects of engagement enabled. We selected Salesforce as a tool to build this platform out on, and that's sort of been the journey for FinLeads so far. In terms of FinLeads, and I know we are coming up against our time here, so I'm going to take a quick minute to give you a quick overview of what FinLeads today, how it exists today. So obviously at its highest level as a platform, this is oriented towards the marketeer in your organization, or the direct or field loan officers in the organization. It has the ability to provide the engagement and interaction with the borrower across multiple channels, whether it's email, Walt indicated the marketing automation integration for email, but direct integration to your corporate or enterprise marketing tools is also supported. It has APIs, standardized APIs for interaction with your self-service channels, the web-based self-service channels that you may have. Walt talked about the notification framework, how that framework comes into play, the data integration framework that comes into play. So how does a borrower start their journey on the self-service channel, but maybe a loan officer can step in at a particular point of time to assist because they've got stuck at a point of time? How does the notification framework actually send notifications because the customer or the borrower is logged into the self-service channel based on certain indicators or flags that may have been set either from on the data that they have submitted for the application, or based on where they are in their lead pipeline, or it could be custom notifications that are being sent out by the loan officer, where the loan officer doesn't want to be that intrusive and make a call, but just wants to send a soft notification out. So all of those integrations are supported between the web and FinLeads. Obviously, it has the dialer integrations. It has chat integrations, marketing automations we already spoke about. The other aspect is if a particular client is oriented towards doing a lot of purchasing of leads, then it does support multiple lead aggregators, a dozen or so different lead aggregators to bring those leads in, pop them up immediately so that you can make that phone call, that initial reach out to the customer within 30 to 40 seconds. In terms of the feature sets itself, all of the stuff that we spoke about to either support the marketing function or to support the loan officer, you need a set of features that are obviously around the lead management aspects, the alerts and notification aspects, being able to configure dynamically or to set a few standards, because we work with clients that want to be a little bit more prescriptive in terms of the workflow in certain channels, and then leave the other channels a little bit more open to dictate terms in terms of how the workflow works. And this is the workflow all the way from the early lead and marketing engagement all the way to the app closure. So the ability to configure the workflows to sort of support different roles, that is supported. And then there's all the integrations that you have in order to do that with your loan origination, your product pricing engine, and so on, or with third parties, like credit, the verification of income, assets, and those various features, so that you can bring data into the system to sort of support that that application flow. We are starting to enhance a lot of these features with the ability to support influencer marketing. So not just being able to support the borrower journey, but the influencer journey of the borrower, the referral network that Walt was talking about. If you're working with builders, you're working with realtors, then being able to get a view, the loan officer to be able to get a view of which relationships of them are driving the most traffic, but also for that influencer to be able to get a view of how their interaction, what is the total book of business that they are driving with that particular lending relationship. So all of those are the cool features that we have built out as part of FinLeads, and we've had two really successful deployments so far. One obviously with Walt and his organization, and there have also been other lenders. So that's in a nutshell what we've been solving for with the help of Walt and his team through the FinLeads platforms. I can probably take a pause at this point, and if there are questions from the group, we'd be happy to address them.
This is great. Samya and Walt, thank you so much. This is such great information. And like Samya said, I'd like to turn this over to our audience now for any questions that you have.
John, this is Dustin. We do have a quick poll that we're going to launch here. So if you have a chance and you can answer the poll question, then please do so, and we'll announce the results here at the end of the Q&A session. So if you're going to answer the poll question, make sure and do it right away, because we'll answer it at the end, or we'll announce the results at the end of the Q&A session. John, I think you've got a couple of questions there.
Yeah, I do. Okay. First one, what are some of the challenges in implementing these business process changes and systems?
Walt, I can talk about it more from a partner's point of view, but I think the broader question is around the change management aspects here. Do you want to maybe address some of the things that you're seeing for the Homestar implementation?
Sure, and I will tell you, kind of repeat what I just said. As many LOs as you have, that's how many different, workflows that they're going to ask you to produce for them. A lot of our larger branches, for instance, have built their own machine over years, and our machine has to replace and be better than their machine in order for them to move off of their existing machine. So convincing them that we really understand what their unique workflow is and how they organize their team around presentation of information, that's a challenge. That's a real challenge, and I think getting just the basic question of what do you want answered is probably one of the places where, over the years, as John mentioned in my introduction, I've done 17 package software implementations. This is actually the 7th different organization that I've implemented Salesforce for over the years since probably 2007. It's always different. It's never exactly the same because the people are different. And when you start to work with the machines are easy, but the people can be very challenging. So as we start looking at changing how they do business and literally taking tiny steps that will just obviously improve their ability to use their time is the most important way to phrase what you're doing. It's the most important way to frame the conversations where you're asking them detailed questions about how they do what they do, and would it be better if we had these kinds of capabilities. Those are interesting conversations, and again, that's the biggest hurdle for implementation of anything like this. It's always going to be those interactions, and salespeople, you guys all have them, so that they are very demanding and can be it can be challenging. So you got to be on your A game, and frankly, your partners have to be on their A game too, and that's an important part of making a selection about who you're going to bring into those conversations with your sales team. I'll stop there, Shema. Is there anything else that you're thinking of that I should be saying that I haven't?
No, I think I can probably add a little bit of the technology providers color here. One big challenge, obviously, of enabling the unified pane of glass is the lending process is complex, more complex than almost any other borrower or consumer-facing transaction that's out there. And one key aspect to that is the number of data integrations that are required, whether it's upstream in terms of data coming in as a lead, or downstream where you're integrating with 10 to 14 or 15 third parties to gather data for the loan application, or even the integrations with your own enterprise systems. And one great advantage that we do have here, this will be a little bit of a shameless shout out to one of the other products in the Vlog suite, is as Tavant, we had the advantage of having this FinConnect framework that had a lot of these integrations built out already, providing APIs in standardized format so that any consuming channel could integrate with them. And really FinLeads took advantage of that product in order to enable that unified pane of glass view for the loan officer, for clients like Walt.
Great, thank you both for that. Well, we have some great results coming in here for the poll, but before I get to the poll, I have another question here. I agree the single pane is critical. What strategy has been used for the originator adoption?
We've been actually working very closely with our learning and development team, our trainers. So we've gone out with videos that are consumable in our training sessions. We've gone out to our branches with kind of a train the folks on site in their workflow, in their home court advantage. We've gotten great results from our training team kind of going to the field. We do a series of what we call Did You Know videos that are less than 3 minutes long, that talk about specific features and functionalities within FinLeads that the sales team can use and start to achieve not just orientation, but moving toward mastery of the tool set. That's really our goal, is to drive adoption early through powerful kind of hype videos. Frankly, it's easy to get salespeople excited. It's hard to keep them excited. And so what we're finding is that we've got to kind of stay on that with tools that will help them maintain the excitement and want to get into the tools and start to use them in creative ways. I've got a pretty good support team that's been working with our customers directly and privately. I guess I would say that, because what you want to also have is a channel where the folks that don't feel comfortable asking the questions in front of everybody can still get their questions answered. And we've been able to flip several of those people who were uncomfortable into some of our early champions by doing that one-on-one and, you know, kind of a hand-holding session with my support team. So those are some of the strategies that we've deployed. You know, mostly I think it's being able to call your shots and build credibility as a delivery team, and that's, you know, part of, you know, having a good partner is you just have to know, here's where we're going in our roadmap with this technology, and let's get out in front of that. Let's whet their appetites a little bit before we deliver it. But let's also make sure we hold the line on our commitments to dates and when the functionality is going to be available. We've actually been on this journey for almost a year now with Tavant, not quite a year. And I'm very pleased overall with, you know, how the adoption's going. Are we all the way there? Nope, we're not. And it'll probably be another 18 months, frankly, before we get everybody all the way up the learning curve to where we feel like we're going to see. But we're already seeing the real powerful results. We just had the best month we've ever had in 17 years in May. And looks like June we're going to blow that number right away as well. So I'm feeling pretty good, you know, from a technology perspective and an adoption perspective about what we're doing. If there's any other question, I'll be happy to take those as well.
I'll just chime in with one thing, Walt. Maybe you're underplaying this a little bit, but in you know, no small part, you've contributed towards that. You know, going and spending time in the field offices, doing, you know, the whole life in, you know, day in the life of the loan officer,
yeah.
sort of, yeah. So though I think those are some additional things that have helped greatly.
Okay, great.
I
Thank
agree
you.
with that.
So the poll is still open. We're getting some pretty good response rate. So if you haven't responded yet, if you could please throw in, that would be great. And I'll read the responses off real soon. One other question here came in. Looking forward, what would be some of the things that you'd see as additional areas of focus? I guess that could be either one of you could answer that.
Well, let me tackle.
Yeah.
I'll tackle a little bit of that. I mean, so there's some really interesting changes that are going on in the mortgage industry more broadly that I think are going to affect us. You know, and maybe it's already affecting some of you guys. In our marketplace here, you know, we've got about 22 states that we're operating in. And the big cities are definitely different than the rural communities, but all of us are starting to see the emergence of either the big real estate firms going into the mortgage business and or the builders going into the mortgage business. You know, so they've all got their own guy, and there's some incumbent advantages there. We're going to have to be better at our game and really reduce our cost in order to outcompete, given those kind of leveraged positions that these guys are taking. We're also seeing, you know, emerging companies coming into the marketplace, particularly on the realtor side, where they're saying, hey, you don't have to sell your house and list your house in the traditional way. We'll just buy it from you at market, and you can go ahead and go buy your next house right away without having to put up with any of that listing showing blah, da, 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 da stuff, right? And so that's going to affect us too in some ways. Because, you know, that almost cuts us out of the process in some ways. So we've got a number of those companies that are operating in the greater Atlanta area where I live, and you know, and the experience so far has you know, from people I've talked to that have gone through that, has been relatively good. So again, there's some trending out there. You know, you take a look at the way the demographies, right, the demographic groups. The younger the buyer, the longer it's taken them to get into a position in life where they want to buy a home in the first place. They're taking longer to get married, longer to have those early children. They're also, you know, definitely in the cities, they're saying, I don't want to live in rural America. I want to live right downtown where the action is, and I don't necessarily want to even have a car. I like Lyft and Uber, and they can take me anywhere I need to go. So what we're seeing is some very large shifting in buying patterns and in, you know, the selling patterns. And so I think, you know, having the platform in place that lets you very flexibly, very nimbly start to adjust not just your marketing efforts, but also your sales efforts, and then most importantly on the back end, your production efforts to accommodate whatever that shift is in each of your individual marketplaces. Those are huge considerations for us in the mortgage business right now.
Wow, so true, so true. A lot of true statements in there. So, all right, well, the poll is still open. I'm going to read off the answers. So I see that the answers went up by 2% since a couple of minutes ago. So if we could get another couple of responses, that'd be great. The question on the table is, when do you see your organization focusing on creating a unified funnel and an LO desktop platform? And the answers are 13% of you said already complete. That's fantastic. 38% are in progress. 13% remainder of 2019, and 25% are beyond 2019. But the good news here is 0% of you said not important. All right, so with that, I don't see any other questions. So that concludes our webinar at this point. And we want to make sure that we do our best to deliver quality content. So I have a favor to ask of all of you. You'll be receiving a survey within an hour. Please take the time to fill that out to let us know what you thought of today's webinar. Also, if you have anything that you would like to learn about in future webinars, please let us know that as well. Thank you again and have a great day.